And welcome back to the ETF Edge portion of Halftime Report. I'm Bob Pisani. Our guest today, Steve Sachs, head of capital markets for ETFs at Goldman Sachs. And Andrew McCorman is the managing director at Wallach Beth. Steve, you run the Goldman Sachs ETF business. Your biggest fund, that's the $10 billion active beta large cap, owns all the big FAANG names. This is multi-factor. You've got quality, momentum, low volatility, all combined, all equal weight into a single ETF. So the question is tech going to continue to rank really high on this list, on the quality and momentum in 2021? FAANG's your biggest holdings right now.
Yeah, and good to see you, Bob, as always. So, yeah, look, it's been the biggest holdings in GSLC, which is the Goldman Sachs Active Beta U.S. Large Cap Fund, for quite a while. The turnover in this strategy is relatively low at about 20% a year. So, look, those have been persistent and consistent names at the top holdings of GSLC for a while. But Bob, to your point, look, the whole design of GSLC is to be, an equal weighted approach to multi-factor: quality, value, low volatility, momentum. And look, picking individual factors is tough. I mean, look no further than this year in the marketplace. It's been a difficult proposition. So we think having that consistent and persistent, allocation to multiple factors in an equal risk-weighted fashion really tends to produce, better risk-adjusted results over time.
Yeah, multi-factor seems to be working very well right now. Andrew, the markets can't seem to decide if it should focus on the spring opening of 2021 or on the COVID winter of 2020. Today, it looks like tech, work from home, they're doing better. And what looks like this, I call it lockdown light, that the country is now entering.
Yeah, I really think that we're in a tug-of-war between different types of investors, which is fine. Again, if you're long-term and forward-thinking, then you want to be paying a manager like Goldman Sachs to discipline their model and put it out there. However, you have a period like today, New York City schools closed, and that just kind of re-engages this kind of retail investor and day traders who are very powerful in this market. Look at even Zoom is outperforming the NASDAQ today by 0.5%. And then some of these names like Boeing and these comeback names have kind of just come in a little bit. I don't think that means they're a sell. It just means the longer-term money, like Steve said, doesn't have the turnover that the day traders have. But there is a chance to be outperforming and have that be a powerful trade if you're on the right side of it, like many investors were this year.
Okay, thanks, guys. Don't forget ETF Edge, 1 p.m. today. We'll be diving into multi-factor ETFs that weight towards several metrics like quality, size, momentum. Does combining these strategies beat just a single strategy? That's the question. Andrew and Steve will be joined by Steve DeRoyan. He's U.S. Head of Asset Allocation and ETF Product over at John Hancock Investment Management. ETFedge.cnbc.com. Halftime is back in 30 seconds.